Welcome back. It's time now to take a look at the top business stories. Dubai World to sign restructuring deal next week. IMF expects Qatar's economy to rise by 1/5. And more billionaires in BRIC countries, according to Forbes' rich list. Let's look at the equity markets first. The DFM rose 7% in the past 5 trading days. Today, Dubai's benchmark gained 0.5% to close at 1,449 points. Aramex rose 3.5%. Arab Tech Holdings 0.7%, while Union Properties fell 1.5%. Dubai Financial Market gained 2.5%. DU was up 2%. Arab Insurance Group was one of the largest losers with a minus of 6.5%. 138 million shares were traded, valued at 200 million dirhams. And over in the capital, the ADX gained 0.4% to close at 2,617 points, with the healthcare sector posting the strongest gains. Gulf Pharmaceutical Company rose 3.8%. Telecoms operator Etisalat gained 1.4%. The construction sector didn't follow the overall positive trend. Alder Properties fell 2.3% and Suru Real Estate dropped 2.8%. Also, the energy sector posted losses. Dana Gas fell 1.6%, while Taka dropped 1.4%. 47 million shares were traded, valued at 128 million dirhams. And now let's look at the GCC markets, which ended higher today. And to talk about the markets this week, we're now joined by financial analyst Bruce Powers. Welcome to the show, Bruce.
Thank you.
How are you?
Good.
Let's look at China. We had the country posting a trade deficit of 7.3 trillion yuan. That's quite interesting because usually they post a trade surplus. Does that come at a good time since the U.S. is fighting with China over the appreciation of the yuan?
Well, this is a 7-year high for the deficit. Economists have been expecting $5 billion surplus. Instead, they got a much greater deficit. So it's a bit of a surprise and being attributed to seasonality and to the Chinese New Year where some of the factories were closed for quite a long time. Now, it's in the Chinese interest to allow the yuan to appreciate a little bit, and this will probably give them a little more incentive to allow that to occur over time. This will help increase their domestic production, which they've said publicly that they want to do, and also help get their inflation a little bit more under control.
Let's look at gold a bit closer. This week, gold reached a new record high, $1,444 a fine ounce, quite tremendously. Is there more to come, or will we see a correction in the next coming weeks?
Well, so far we're seeing gold consolidate very close to the record high, which is a very positive sign. It's a very bullish sign. Gold recovered very nicely from the low in January, and its recent price action is indicating it wants to go higher. Now, analysts are coming out and giving higher price targets, so I expect if we do have a short-term correction, first of all, it'll be short-term, and second of all, it'll be perceived as a buying opportunity by investors.
Have a good weekend. And now to our top stories. State-owned conglomerate Dubai World will sign a final deal with its creditors to restructure around $25 billion of debt next week, Chairman Sheikh Ahmed bin Zayed Al Maktoum said. He added that he did not think that the group had been affected by the situation across the Middle East and North Africa. Also, there was no pressure on the company to sell its assets. Last September, Dubai World had secured the support from over 99% of its creditors for its restructuring deal. And another story circling one of the 3 Dubai state-owned conglomerates, Investment Corporation of Dubai, the investment arm of the government, acquired the remaining 50% stake in National Bonds Corporation. The step gives ICD full ownership of the Sharia-compliant savings scheme. National Bonds' previous shareholders included property developer Emaar Properties, Dubai Holding and Dubai Bank. ICD did not disclose a value for the acquisition. ICD's move to acquire full ownership of National Bonds stemmed from the confidence in the company's long-term potential as a dynamic and diversified savings scheme, its chief executive Mohammed Al-Shabaini said in the statement. Mubadala Development Company, the Abu Dhabi government-owned investment company, offered to buy a stake in state-owned Dubai Aluminum Company to create a new holding company. That's according to press reports citing Dubai's deputy ruler. The new company will also own Emirates Aluminum. Sheikh Hamdan bin Rashid Al Maktoum was cited as saying at a news conference in Dubai. Mubadala has not specified how large the stake would be it wants to acquire. Dubai Aluminum's profit doubled last year to 2.1 billion dirhams from 1.1 billion in 2009. And in our fast financial news, the economy of oil and gas exporter Qatar, the world's wealthiest country per capita, will grow an enormous 20% this year, the IMF said. In 2010, the oil and gas-rich country grew by 16%. The small Gulf monarchy, to host the World Cup in 2022, will face a rising tide of inflationary pressure, though likely not more than it can manage, the IMF said. The Abu Dhabi Tourism Authority has tied up with TUI, Europe's leading travel group, to stage a 3-month promotion throughout Germany. The campaign could result in as much as 3,000 extra room nights for hotels in the UAE's capital in the last half of this year and the first quarter of next year. In January, the number of hotel guests staying in Abu Dhabi's hotels rose by 26% on the same month in 2010. The Arab region's richest man, according to Arabian Business, is Saudi Arabia's Prince Al-Walid bin Talal Al Saud. The billionaire announced to invest 1 billion riyals, or $267 million, in Saudi's stock market. The market fall of the past weeks was not justified, he told reporters, adding that the economy of the world's top oil exporter was healthy. Diamond prices could jump 30 to 50% by the end of the year, leading jewelers in Dubai have predicted. Firoz Merchant, chairman of Pure Gold Jewelers, said prices have gone up by 50 to 70% in some areas in the past 6 months, and that there was more room for another 30 to 50% increase by the end of the year. And after the break, we will run you through what's making the headlines in international business today.